Hey everybody, so welcome to my channel, welcome to another video. So the market itself is doing well today. It's up. All the Dow, the S&P, and the Nasdaq, they're all up. And it all had to do on what we received as far as the inflation data. So the inflation data was expected to be at 3.1%, but it came in at 2.7%. So that fared well with the market. Still not at the 2% rate that's where the Fed's really looking for, trying to get down to 2%. And there's also some Micron news was better than expected. And it goes kind of, this whole market is kind of zigzagging. Yesterday it was down, today it's up. I know a lot of the AI stocks are up big today. Yesterday they were down big. So it's kind of, you go with the flow here. And yesterday, the majority of the reason why a lot of the stocks are down, including AI, was all because of Oracle. What happened with Blue Owl pulling out 10 billion, they reneged on that. But then again, they've committed to Oracle, 15 billion, another 10 here, and then they just pulled out the last 10. So they're still involved, but it had a big shock on the market yesterday, and it was just like, it seemed like it was a one-day thing. There's all these one-day things with AI and stocks, and then today it's up. So stuff like this, you can't really panic sell or can't panic buy. It's just go with the flow. So that's good news on the inflation, but it's not really the perfect number as far as the Fed really wants it down to 2% inflation rate. So no matter what, we're all going to be paying more, and we are paying more at the grocery store. Pretty much everything is going up with inflation. Your homeowner insurance, your car payment, your cars, just everything across the board is cars, houses, groceries, electric bill, water bill, everything, no matter what, is spent on inflation, and it's just been crazy high, and we're all paying for it. But at least the Fed is trying things to try to get it to 2%, so it's kind of normalizes that, so then we can go back to like a 0% interest rate and drop the rates, so make loans easier to get, and companies that will start hiring again. But overall, today it's a nice day today. It's only Thursday, but it was all riding high. The market's riding high just based on these inflation numbers that we got. So it's just kind of like the whole market is a basket case for one day up, one day down, the next day up, next day down. But overall, it's still trending up. So if you have stocks, own companies, stuff like that, you can't really complain there. So it's doing your portfolio well, and you can't really complain at all. So I took the scenic route, the horse route. No horses today, but I just wanted to get that out there. Great news on the inflation. So I think that inflation is kind of normalizing that. I think the Fed's going to have more reasons to cut rates, since they're not gonna have the inflation worries about as much as just trying to get these more jobs out there, because I think they're more concerned about the job market. The unemployment rate ticked up. It was 4.4%, and it went to 4.5%. So usually when it starts ticking up like that, it's just, no matter what, it just keeps trending up until it doesn't. So I think I'm happy that the inflation, they're getting that under control. Of course, you may not see it in the grocery store. I think once they lock those prices in, they're locked for good almost. But inflation, at least they're trying their best to get it under control. And that way we can keep lowering rates to try to get to the 0% that I know the Trump administration wants to get to. I think right now it's around 3 or something like that. Don't quote me there, 3% or but around there. And then of course you're going to get less money on your savings in the bank when they drop these rates. To keep dropping the rates. So you may see less money there. It already drops. But then of course your borrowing is cheaper as well. Not necessarily on your credit cards and all that stuff. They usually are locked in there, or that's a ton more based on your credit rating and everything like that. But it's good news for what's going on with the credit market. And I think they'll just, now that they have inflation down, they're going to keep dropping rates even next year, especially since Trump's going to have his man in there and new Fed in there. Don't have a man in the fight there, but he's going to pick somebody that wants to get these rates down to 0%. When I think for the next year or so we could have a better market with that, but then we're gonna get to that point where it's so top heavy, and maybe their crash will happen. But you got to prepare for that. But I don't think it's coming anytime soon. But it's good things don't run forever, like how this market is. I don't think everything doesn't last forever. The same way it goes for the stock market. So yeah, keep an eye on your portfolio. You take a look today and you'll see that it's up handsomely today. And yeah, all because of that inflation data. But one day is just one day. You can't factor in just having a good day here. Can't write it in the bag there as like a win or anything. Yesterday was crushing, and then today is just counted as just a bonus, I would say. So it's like having a sunny day compared to a rainy day. You can't really pick them. So let's see what happens tomorrow, Friday, the end of the day, and just go from there. I think it's going to be probably a continuation, but we have all these lagging reports actually. So this one, inflation data, was kind of a lagging report. So you have a bunch of reports that are out there that are just when the market was closed, when the Fed was shut down. And so we have a lot of lagging markets that a lot of reports that they haven't reported yet. So they should be coming out soon, whatever the rest of them that are left to show. So we'll see what happens there. But yeah, just keep on with your plan. That's what I'm doing. Not a financial advisor or anything like that. Just my personal opinion here. And as far as the market goes, Santa hasn't even really showed up. It's basically been the Grinch, because we haven't had any kind of Santa Claus rally, and I really doubt we're going to have one now at this point. Just a lot of analysts are changing tunes on, like, kind of being more bearish as far as the market is concerned. And yeah, you gotta, like, there's some analysts that were really bullish in November, and then that didn't pan out, and they changed their tune. But they're saying that this bull run could go on the next 2 years, but it may not. But overall, it is what it is, and you can only do what's given to you, and that's all you can really do as far as the stock market goes in investing. Whatever the market gives you, the market gives you. And that's what I have to say today. And let's see what happens for tomorrow, and then you got the next couple of weeks, into the Christmas rally. And I doubt it's happening. It's going to happen at all. And maybe we'll have a New Year's rally. But usually, a lot of the times, January, it depends on January. Kind of sets the tone for the rest of the year. And I think today the tone is a great inflation number, and I think let's go with that.